Mic check, mic check. What's going on, everyone? This is Jordan with Conquer Trading and Investing, and it's a Tuesday morning as we get ready to start this week and kick this week off. Mic check, mic check. Looks like we're all good, ready to go. Missed you all on this long weekend. It was Labor Day in the U.S. I hope you all had a good time. Got to enjoy those moments of life with friends and family. And now it's time to get to work. And here we are. Let's go ahead and paint the picture as we start this week off. And it's a big week ahead. We have on Thursday, we have the ECB stepping to the plate, and they are expected to get serious about getting inflation under control by doing what they can. And that is, hiking a little more than 25 basis points. If you rewind and you go back to late 2022, and there were discussions, or we were bringing up the discussions about a rate shock coming in 2022, people were almost indignant that the ECB could raise rates. Here we are today, ECB this week getting ready for, I imagine, a 50 basis point rate hike. It's potentially possible. It's been floated a 75 basis point hike. And on top of that, we have this conflict going on, a really, really big conflict. And that is, as the central bank is raising rates to fight inflation, we are seeing, because of the energy crisis in Europe, we are seeing the governments respond by the only way they know how. Does anyone know what that is? Of course, you all know what that is. That's to go ahead and print money. And you're seeing overnight $200 billion released, or set to be released in the EU. We're looking at 65 billion out of Germany to fight these high energy prices. And then the new PM of the UK, 135 billion. And that's, I think they're just getting started. I imagine they're just getting started. I don't know whether or not we're going to see any type of quick resolution to this crisis. When I say quick resolution, the only quick resolution that I could think of would be like Germany and or other countries, turning towards Russia and being like, we made a big mistake. Is there any way we could kind of like rectify this? That would be the only near-term solution I could see. I know that everyone's trying to go ahead and get through this winter. I know that everyone's trying to put Band-Aids on this like gaping wound that we have over here. If you're talking about any permanent solutions, I mean, you're talking 5, 6, 7 years away. So I imagine that we're going to see lots of more of what we're seeing today, and that is governments responding by just, hastening hyperinflation. But we'll see what happens. We have Powell speaking right after the ECB. That is quite the peculiar arrangement of central bankers, and I wonder if it's Powell's going to be there to do any type of damage control. Be on the lookout for that. And then throughout the week, we have a whole barrage of central bank speakers out of the U.S. and what they're going to be doing. Well, I imagine they're going to be as hawkish as they can be, and they're going to continue to make sure that things look tight. What we're looking forward to, you all know, we are looking forward till next Tuesday's CPI 1 week from today. That should be the data print that makes or breaks the month. And people are wondering here on Bitcoin, is the low in for Bitcoin? Is June the low, right? Look, I don't think that anyone out there who's telling you that the low is in or that we're going to be making another leg down, one side is going to be right. The guy out there telling you that the June low is the structural low and that we're going higher, or the guy telling you that we're making another leg down. I mean, one of those two is going to be right soon, but I think it's more or less dependent on what that CPI print is. And why I say that is if that print comes in, let's say hot, greater than 8.5%, I'm not even sure what the expectations are. We'll find out soon. At that point, you are going to see very quickly priced into the market the probability of a 75 basis point rate hike at the end of this month, sharply being priced in, and the markets are going to react. I'm talking about Bitcoin right now, but it's the same thing across the equity markets. And you are going to quickly see a leg down, I believe, taking out that June low. S&P 500, we have this nice little trend line over here. barely holding as support right now. And below that, we have a little bit of supply, a little bit of horizontal support getting below 38.50. And it could be very quick to not only testing the yearly lows, the June low, but taking them out. I think we need to go ahead and add that in to the NASDAQ as well. That little bit of a guideline over there, exactly where we are. We are teetering right now on the very edge, and we got a hot week ahead of us. Again, ECB getting ready to move in. We're seeing governments getting ready to run their printers. And then in the US, we're going to get a reality check as we are data dependent of what's coming and what's coming next. Beyond, here we go. We can see over here that really what we're looking at is the market waiting on the CPI. And depending on what that print comes in, that either we are going to be headed towards a test of the yearly lows and likely breaking them out. But I personally don't think or see this month's CPI print being hot. I actually forecast it as being rather weak. And depending on how weak, we'll see what kind of rally we get. I do believe it'll be under the previous month. Then you have 2 months in a row of, let's say, lesser, very super hot prints. 9.1% was the hottest. And then we had 8.5% coming in lesser. And if we look at headline food and inflation, they've come off in the last several weeks. Now, what happens going forward, that's a whole nother story. It's not like as if once we get this current month out of the way, that all of a sudden we have this clarity to say, let's play a little game. Let's pretend that this low holds through September. Jordan, September is seasonally, historically, a very volatile month, and that volatility is to the downside. We got a ton of across the equity market, CTA selling pressure coming this whole week. It's going to be an absolute disaster. And then we're coming right into earnings. And most likely, well, we didn't think the earnings were going to be there last quarter. Are they going to be here this quarter? It looks like we are just about to enter the storm. And that very well could be. You know what? I'm open to everything. I am completely just trying to get through these turbulent times by following what's happening rather than becoming deterministic about what I foresee happening, And what do I mean by that is we might escape this month. We might escape this month if we get a softer CPI print, if all of a sudden, let's just say things go risk on way. At that point, it's not out of the woods. If we start seeing the price of certain commodities, I'm going to focus here on oil, and I have to clean up our sketches, but we did very well over here in protecting ourselves from the upside. Lots of people bought hook, line, and sinker into that breakout over there. We were watching it, but we were protecting ourselves, not taking breakouts, waiting for a retest, which did not resume off, but instead was a failure. And then taking out that trend line over there, we've now are coming back down and testing that low. So oil, by the way, is one of the few assets that has almost correctly priced in, let's say, the macro. What do I mean by that? As we saw over here in when Powell's last press conference, when he talked about the neutral rate almost being had, and all of a sudden everyone's like dovish, and the equity markets really swiftly put in a massive rally. Oil didn't buy any of that. Oil over here definitely reacted to something that was happening fundamentally, as the Saudis talked about, they're not happy with the prices and they were looking to cut production. But I feel like oil's been a good barometer of really forecasting this coming recession that we're headed towards. Now, I know it gets a little bit like people are, 2 quarters of negative growth. That's a recession. Yep. That's a technical recession, but I think it's more complicated than that. And if you look at third quarter GDP, it seems to be actually reversing quite sharply. We'll see. Where was I going with that? I was talking a little bit about the Bitcoin, and I was talking a little bit about expectations going further. And I just wanted to say, if we start seeing price of oil, right, because of, you look at the supply side, right? If you start seeing all of a sudden oil start reversing over here and we start seeing this coming back up and rising and catching a bid. We saw the DXY do that, right? We saw the DXY, like, although it hit off a sell impulse over here and then it was able to continue down, very quickly it resumed back towards the trend and very sharply. And oil could do the same thing. I mean, oil right now is in a massive uptrend. I mean, we caught the sell impulse over here, and I want to make sure that, unlike on the DXY, where I wasn't paying attention. If we start seeing a sharp rise back towards the trend, that we make sure that we see that happening on oil and are able to position accordingly. And if that's happening, the macro could change rapidly on both sides. If we start seeing at any point in time, whether it's October, November, or December, all of a sudden CPI, instead of rolling over, right, coming back and shooting back this way, well, we got to get ready and we got to make sure we're on top of it. Looking at over here this morning on the Bitcoin, and you could see that the short side is still right now continuing to hold. We are doing nothing more than consolidating over here at the lows, right? I look over here and I could say, well, that was a breakout of a descending wedge. That's true, but price has gone nowhere but sideways since. It looks vulnerable. It's not the same across the board. If I look over here at Ethereum, by the way, Ethereum over here, you could say that, well, short side, we've definitely exited. We're neutral on both sides, even though you're starting to see potential green arrows getting ready to shoot off. Still, I don't know what happens 2 hours from now, but still on the sidelines over here, the Kalman filter keeping us out of the trade. The Kalman filter, by the way, was introduced by Reza. After CTM 2.0 was introduced, we talked about this is a momentum system. And when momentum is either going to the upside or downside, this system is going to thrive. But at any point in time, you are in a sideways chop. That's the most difficult circumstance to trade through. If at any point in time we had any type of filter to go ahead and filter out any sideways trades, that would be like the sprinkles on top. Reza was able to go ahead and introduce that, and it has provided an effective weapon since. People might be noticing Bitcoin dominance, probably not doing what a lot of people expected. Let me jump in over here. If you go back right over here, if you go back to June 9th, as Bitcoin dominance was rising towards 57, lots of people talking about, one way towards 60%. I put out a poll on the Twitter. I put out a poll to let people decide, what do you think happens first? 38 point something I put out, because I wanted to make sure that it was going to be a breakdown of this area over here, or 60. I think like close to 70% of the people said 60, right? And here we are. And I did it not as it was falling down. I did it as it was rising, right? Look, people might talk about the changing dynamic of the crypto market. And if you look back 4 years ago, right, it was entirely different. In the top 20, you looked at almost all altcoins. You had Tether up there. And if you look today, you see a whole host of stable coins and or exchange coins. But here's the thing, they play an important role. And the important role is that in the past, when you were exiting an altcoin, you'd be exiting into Bitcoin or Tether. Today, you have a plethora of options that if you want to exit an altcoin, you don't need to go directly into Bitcoin. So I think it's relevant looking at the changing dynamic and structures of the market. And then there's also the possible or potential that, actually what we're looking at, we looked at the Ethereum Bitcoin cross. We could say, well, this is like pointing to a risk on type move. This is risk on behavior, right? A lot of people would be expecting that this crossover here to be trading a lot lower, a lot towards 0.35 in a bear market. And I'm not saying we're not in a bear market. We are clearly in a bear market, but we are seeing potential signs. I'm not going to deny them because things look terrible and say, you know what? We're looking at potential signs that this June low over here is the structural low.
Now, I don't know what happens going forward. I don't know what happens towards the end of this year. I don't know what happens into 2023. But if we're looking on the equity markets, if we're looking on Bitcoin, crypto, it is possible that the June lows over here are the structural lows. Right now, the bulls will need to go ahead and make a defense, right? And why do I say that? Is because we've pulled back into an area of support. If we lose this, it's going to get very fragile, and then we are headed back down. I think that's the way to frame and start off this week as we get going. One thing out there I want to just also mention this morning is that, if you are away from your desk for the weekend, if you have a 3-day weekend and you come back Tuesday morning and then you're out there just chasing price and shooting from the hip, it's kind of like a snapper turtle. Snapper turtles, I imagine, are out there in the pond and they're just like wailing about, snapping at anything they can, But we want to be like sharks. So you want to be like a shark and you want to hunt your prey and you want to make sure that you are really getting an idea of what you're up against, what is happening over here. And guess what? We are still it's just after Labor Day. People are just getting back to their desks. We have a big week ahead of us. We have a huge calendar. By the way, tomorrow is services PMI. I wouldn't read too much into that at all. I would be looking for hints, what we see coming out of the Bank of Canada, whether or not they continue to raise rates. Look over here. You got 75 basis point rate hike forecasted, but the main event is definitely going to be the ECB. And then after that, Chairman Powell. And that's only setting us up towards next week. Here is when I can't imagine personally, this is my own bias. You want to be aware of your bias. I could tell you that you should not have a bias, but at the end of the day, you're going to have a bias. And the more you're aware of your own personal bias, then the better you'll be able to be, or keep it in check, I should say. My own personal bias is that we're not going to see a big move one way or the other until after next Tuesday's CPI. So does it make sense, not from my perspective, does it make sense to be out there taking unnecessary trades? I don't think so. I think right now I'm kind of surprised, actually. You all have demonstrated a lot of patience. I personally think it's one of the hardest things to learn in the markets. And I don't know if it's because a lot of you have, because coming from a Bitcoin background, you've been taught the value of time and patience. I'm not exactly sure why it is, but I really, really sense that all of you have gained one of the most difficult skills to master in the markets, and that is patience. Definitely want to applaud that. At the same time, if you're trading some type of, let's say, mechanical system, regardless of what you think is happening over the next week, anytime there's a signal, you're taking it. You don't get the luxury to be like, well, even though I have a signal, I'm going to go ahead and step aside because, it could be like, well, I don't want to go ahead and buy into resistance, or I expect some type of sideways chop. Well, I've been telling you actually for a while, coming off some really big gains on both sides. I mean, first on the downside, then on the upside, and then all of a sudden putting together, this one's a small one, 5%, but nevertheless, I'm expecting a series of losses, but I'm all about making sure that I continue to take them. That is probably, that type of discipline and execution is one of the most important keys to success when trading a mechanical type system. We are light on likes. I know we're coming back from the holiday, but we have a pretty decent sized room in here today. 177 people here watching live. If you get the opportunity here, go ahead and smash the like button. And I definitely thank you in advance for doing that. It does get me fired up, and it does get the Google algorithm fired up. So I'm really grateful for that. I have made, it is Taco Tuesday, Luke, aka Luke Costas, and that is the truth, right? Boom. Thanks, John. Appreciate that love. I really, really do. Yeah, I don't try using Bitcoin total.
Minus, there you go, minus you. But Robbie, I don't believe that we should take out the stable coins, right? I think that the stable coins provide a really good, important use inside the ecosystem. I'm not trying to remove the stable coins. They are part of the cryptocurrency market, and they serve a purpose, and they serve a purpose that Bitcoin used to serve. So removing them would only go ahead and help me, potentially affirm an opinion or a bias that I hold. That's not what I'm looking to do. I'm looking to see what's going on now, and I'm looking to go ahead and adapt to the market, not get the market to adapt to myself. What do I mean by that? I mean, you could look at, well, let me show you. Let me pull up this little chart over here of Ethereum versus Bitcoin. And this is going to live whether or not you could hear me. Boom, ba boom, ba boom. Mic check, mic check. For the strong, for the brave who are still left. If anyone gets a chance inside the chat, it looks like from my end here, we are still a go. If we are, someone let me know. Actually, here on the phone part, boom. Oh, yeah, we are back. Yeah, Ben, this morning, Ben from Into the Cryptoverse telling me that he has a blackout at his house. And now over here, we got a blackout over here. I think that's the first one we've ever had. I don't know. It sounds like something's going on over here. Maybe they're just trying to put a squash on any type of free world information happening. No, I jest and I kid. That's obviously not what's happening. It's just an good old fashioned power outage. Boom. Shark, you're probably gonna want to wait for when I you're probably going to want to wait for when I introduce an introductory course. CTM 2.0 is not for noobs. It is absolutely not. And, I would say it's the best of the best. So, but anyway, that the pricing for that and the accessibility is all being restructured is going to be much, 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 much more difficult to have the opportunity to work on team with myself and CTM. But it doesn't sound like it's a right fit for you. That's all. Don't worry about it though. There's a wealth of education that's shared here on the public side. If you show up and you put the time in here, on these daily public streams, you're going to get to where you need to go and a lot quicker than any other way I know. So commit to that. And that's where you want to focus in on. So I was talking about the difference between previous bear market, the last bear market we had in 2018, and something that we saw that was, let's say, all coins bleeding into Bitcoin, and because of it, Bitcoin's dominance really rising. And that ended over here, obviously, with the capitulation that took place. And, we're seeing a big difference take place now. And by the way, this difference is not being pointed out today. It's been pointing out throughout the observation. Are we going to see this time this space continue between Bitcoin and Ethereum? And when risk turns around, are we going to see that space continue to the upside? We're seeing a massive divergence actually taking place. Now, that's very questionable whether or not that is capitulation. That is a capitulation event that took place over here, but whether or not that's the capitulation event, there's no one who can tell you one way or the other. Nobody has that type of information ahead of time. We talked about that earlier in this morning. But what we are seeing, and is it possibly because of the merge? Maybe, but it's not only Ethereum that we're seeing running, right? Cardano is putting up some impressive moves. Things like Ethereum Classic and across the board, I don't even follow the space whatsoever. We're seeing a lot of altcoins. It looks to me potential risk on taking place. We'll see. Is Bitcoin being a little bit suppressed because of, let's say, speculation going towards Ethereum because of the merge? Maybe, and I'm sure a little bit. I'm sure a little bit, but what we've seen take place in Ethereum seems to closely match what's taking place across all markets. You could even just go ahead and look at the NASDAQ, S&P 500.
their moves off the low. And then at the same time that those moves faded right before Jackson Hole, you saw also Ethereum come off. So we'll see. We're just going to be observers, but something is different. Something's a lot different than the past bear market. That was 4 years ago. The space was, let's say, a lot more immature than it is now. We're still looking at a very immature space. Overall market cap, what is total? Are we looking at $1 trillion anymore? Is it closer to 800 billion? Not exactly sure, but it is an immature space. And I think that as it continues to grow, as we continue to see different players enter the space, we cannot keep looking back to what happened in the past and expect that to repeat itself. We have to be looking at the ever-evolving and changing nature of the space. Bonds, we see the 10-year from afar rising up strong here this morning. Wow, that is very, very strong, right? And there's not much else to say, but appropriately so, right? If I look at what I perceive to be happening throughout the rest of the year from afar, I have to say that, this month we're looking at 50 or 75 basis point hike, depending on what inflation is when we get to November, right? So that October and November CPI are going to be so critically important, because if inflation is coming off, and when I say coming off, by the way, I got to record yesterday with oh my goodness, I don't know what just happened to my brain right now. TMC Trades, and what a beautiful, incredible conversation we had. I cannot wait to get that out to you. It is going to really bring just a massive clarity for exactly this moment in time where we are, as far as primarily the Federal Reserve, its policy, how that's affecting markets, what we should be expecting over the next 30, 60, 90 days throughout the rest of the year, speculating into 2023. It was just an absolute joy. I will be able to go ahead and spend time editing that, polishing that off, and getting that out to you very soon. But I would imagine that in November, if we continue to see signs that month over month, we're seeing CPI soften a little bit, we could be looking at a 25 basis point hike in November. But that's all data dependent. That could just easily be a 50 basis points, or if inflation continues to all of a sudden turn around from the crest. Like right now, we're looking at this like 9.1. I lost everything on that reset. I just tried to bring up a little bit of a squiggle, but anyway. Yeah, this seems appropriate, what's happening and taking place right now. Not much else to say about that. I want to take a look also at the Japanese yen and then the euro US dollar. Let me go ahead and put that brush up. You just got to be able to adapt to whatever is thrown at you. And there we go. Should be good. So we're looking at like the crest, right? 9.1 and then 8.5%. What happens next week is pretty important. Do we see it continue to come off a little bit, right? And that from there, we don't know what happens. That could continue coming off, or that could quickly reverse. Here you could see over here, the 10-year did that, right? Came off a little bit on Powell, and then all of a sudden, that first came off on the 9.1 print, and then the 8.5% gave it a little bit, and then Powell, and then all of a sudden comes the Fed speakers, and they're like, no, he didn't mean that. We're actually going to be really, really hawkish, and we're going to do everything we can to slow down growth. And then Powell comes out in Jackson Hole, and then the market back to where it should be appropriately. So this is exactly where it should be. I want to take a quick look this morning at US dollar, Japanese yen. Right, look at that. That's insanity. And it's the correlation between the 10-year that we were just looking at and the US dollar, Japanese yen is pretty strong, except that we are already seeing US dollar, Japanese yen making these new yearly highs over here, 142. I talked about this trade specifically in that upcoming interview, along with the euro US dollar. It's gold. You're going to love that interview. And then what happens this week? What happens if we do see the ECB come off with let's say a a higher than expectations hike, or it might be expected now, 75 basis point hike. What's happening now with the government stimulus? How are those forces counteracting each other? Is it possible if the ECB comes off with a 75 basis point hike and then we see the CPI the following Tuesday come in soft and the market prices in a 50 basis point hike, that we see a little bit of repricing? How long will that repricing last before the dollar comes in just like, fades any fade? I don't know. Just questions I'm asking this morning to myself as we get into it. Luke, to build off on this statement over here, like, what happens if Europe and Japan cause the Fed to pivot earlier? Even if the U.S. doesn't break, U.S. needs stable Europe and Japan to counter Russia and China. And what happens if that break of the Fed winds up being balance sheet expansion? I know that what happens if the Fed is doing quantitative tightening domestically inside the U.S. and then is actually doing balance sheet expansion overseas, whether it has to do in Europe or in Japan? I mean, what happens if the U.S. is actually starts selling dollars to buy euros and or yen? I mean, it's all possible. The odds of that happening, I don't know. It's all possible, though. Marcos, what's going on? Great to see you here this morning. I think that just only brings up probably the most important posture that everyone should have right now, and that is not believing that what is going to happen next. I think that in these unprecedented times that we're in, to have that type of idea is just really doing yourself a disservice. It's going to be, I don't want to build off on that. It was articulated so well in the upcoming interview, so I'll get that out to you, and then you'll be able to go ahead. And I think that's going to be something that's going to provide a lot of value for everyone. So this morning, don't forget, this is like people coming back from a long weekend. Markets over here roaring. Dollar opened up, right? And what did the dollar do when it opened up? We put in this nice crazy candle fading down, and that is completely being retraced right now. Milkshake things are definitely continuing to be in play right now. We are looking at Japan right now, really under a lot of stress. And that's it. And Bitcoin kind of continues just to be weak, right? And that's why we continue to hold those short positions, and rightfully so. Ethereum's different, and Ethereum's neutral for good reason, right? There we are. I mean, that's our opening session here on this Tuesday. Get to spend the day back at the office, really diving into the charts and making sure that tomorrow we come out strong. Before I get off, though, let's see if there's anything else that we want to take a look at or could set up. I mean, we are in a position where we are entering a week. We're seeing big extended moves happen, not something that anyone could participate in now, right? If you weren't positioned on this Tuesday morning. This Tuesday morning, I couldn't imagine someone scoping out or taking a new trade. So I'm going to have to buy my time on that one with y'all. Right? And I mean, the last thing you want to do is go counter train. No one's a hero over here. So we just wait. We wait and we watch and we do our thing, and that means getting back here tomorrow morning. And we're not seeing any type of, this is not stable here. Look at this as we're talking. Look at do you see this? Just that's not stable, right? All right. So that's it. Kicking off the week here, just getting a groove. Usually takes especially after a 3-day weekend, a session or two to really dial into the market. We're going to do that together. First thing that we're doing is the most important thing, is showing up, making sure that we build this routine together and everyone get back into it. Tomorrow, we'll dig in a little deeper and we'll keep going, gaining that momentum. It's September. Things are about to get volatile one way or the other. Let's make sure we stay sharp and on top of it. Sorry about the little interruption this morning. Those things happen, and I'm glad that we were able to adapt. That's really one of the best
or say most important qualities of a trader, being able to adapt to whatever circumstances are thrown at them, including, by the way, and most importantly, to the market, regardless of whatever your bias is, and you're always going to have a bias. When presented with new information, you have to be able to adapt. That comes to the markets overall, like as your understanding of the monetary system, the financial system, right? You could say like, well, there were people just like very recently over the last couple of years did not even believe that like de-dollarization is happening. If you don't see it now, then you're really just not, you're not a student of the market. You just have your own ideas and you're hoping that they happen. The same thing could happen with Bitcoin, regardless of your understanding of Bitcoin and the monetary system. If at any point in time you're presented with new information, you have to be able to adapt. So anyway, everyone, I appreciate you, Leo. Thanks for being here with me, Peter. Everyone, have a beautiful day. Happy Taco Tuesday. I'll see you all tomorrow. God bless you all, everyone. I'll talk to you soon.